Good afternoon. George Cavaligos for HFT Bonds. I'm really bummed about missing today. Obviously, the idea that we wanted to be long going into the Pomo and out of the longs and have a short on coming out of the Pomo into the auction was the great idea. I don't know if I would have played it as well as I laid it out in terms of the emails, but I'm kind of bummed I had to miss it. But hopefully this court stuff's all over. It's amazing. Got divorced more than 10 years ago, and I'm still hassling with the ex-wife. Unbelievable. Oh well. Moving on. We broke the trend line. I think we're in a third of a third wave down. Don't try to bottom fish this thing. Is one of the cardinal rules of Elliott Wave is not bottom fishing third waves. We'll do the Pomo trades at some point here again. I'm just nervous because the 2-year auction went not so good today. That should have been the best auction of the week. Tomorrow we have the 5-year auction, and that, I think, has got a lot of guys caught long. If you remember a week or so ago when QE Forever was announced, Mr. Gross recommended buying 5-year notes, and I think we saw a 2-day bounce in the 5-year notes, and we've given all that and more back, and I think guys are still long the 5-year. You got a 5-year auction tomorrow. Going forward, I think we can probably in the new year start looking at the 5 years as an attractive sector to be playing from the long side, because the Fed is extending their purchases in QE Forever from 4 years out to 30 years. They've bought a lot of the 10 years and 30 years already. I think they're going to probably have to focus their efforts in the 5-year, 4-year, 5-year area of the curve in January. We're not worried about that now. Now we're worried about auction problems. Remember we talked about it, how a lot of customers have shut down their books for the year. I think there's also some asset allocation moves going on into the Santa Claus rally. This week is, I believe, equity option expiry. Historically, it's a very bullish week for equities. I think people are moving out of bonds and notes into equities. I think hedge funds are still way too long bonds and notes. Dealers are still short bonds and notes. You always want to play with the dealers, guys. Peggy Rose highlighted the fact that, I think it was about a month ago now, we saw that massive buyer of the DEES 122 puts in TLT. They're still long those puts. So we got all the big guys, the smart money, on the short side. You've got the Fed and large speculators on the long side. I know where I'm putting my money. I want to sell a rally tonight, tomorrow morning. I'll have to take a look at it tonight. And here's kind of my plan. Now, obviously, I missed a lot of the price action today. I'm trying to get caught up on where the high volumes were. And obviously, there was huge volume back up around the old lows. It's too easy. Typically, what I've noticed is when you break out of a range, okay, you break down. We went to 17 once in the 10-year, then we bounced. Then we went to 17 again, and we bounced. Then we went to 18 plus last night, and we bounced. I think we can go up a little bit further, because you know what happens. People look at that, oh my God, that's a big support level, now it's big resistance. You know what happens. The market breaks, comes back up to that, and guys start to get short again. And then it goes a little bit further, takes out their stops, and then reverses. I want to be that guy that sells it in that, bounce area. That's a lot to look for, I think, at this point right now. We broke the 10-year from 17 down to 08 plus. Trying to bounce a little bit right now. Want to be patient. I think if we can bounce up a little bit here, I'm going to start taking a look at that 14 level, 14 plus. There was a lot of volume went through there in the 10-year. And on the bond side, I want to take a look at that 147.09 to 10 area. That was the old low. I'd love to see it go a little bit above there. We're looking for pretty hefty rallies in terms of that. Now, we don't have any data tomorrow. We do have a small buyback, 1.5 to 2.5 of the bonds. That'll probably give us our best shot. I noticed today that the high was put in about 8:30 on the equity open before the bond or the note buyback today. So we're going to have to be kind of nimble here. We want to take a shot on the short side. I think we can see some further weakness tonight and then a bounce into tomorrow morning. That would be my favorite idea. We'll have to see how that goes. I'm looking for a bounce to sell. I'll try to highlight it in the Twitter feed when I do kind of put the shorts on. I think I'm going to have to start to scale into this one again, unfortunately. And then tomorrow's 5-year should be a problem. I think they're going to want to back the market up into that 5-year. So Pomo, rally, sell, down into the 5-year, cover, see what happens. So that's the game plan. Short term, we'll have to watch these levels. You got to give it a little bit of room here. The markets are getting a little more volatile. I think we did more than our recent average ranges today. So volatility is picking up. That's a good thing. We'll get some opportunities to short this thing on a bounce. I don't think we have any data tomorrow. Maybe one National Association of Home Builders housing data. The housing number has been pretty strong, so I'm not looking for much of a bounce on that. And again, the way this thing is moving, we may have some headlines here with the fiscal cliff thing going on. If they settle on this fiscal cliff resolution, I think the bond market sells off. I think the stock market rallies. I think today was part of that trade. And if you are short and they hit that headline and the market breaks hard, watch those levels in the email that I just sent out to cover against. It's going to be one of those, in the bonds, you want to sell the rumor and buy the fact on the break. And in the equities, I think you want to sell the rally and buy the, the other way around, buy the rumor, sell the fact in the equities. Keeping all this stuff straight. To a certain extent, the dollar was weak again today. It closed unchanged, I think. And I think what we're doing is we're kind of catching up to the big breakdown in the dollar last week here with what's going on in bonds and stocks right now. So I think a little bit of that is catch up. But we want to watch the dollar index. I think that's been the big leading indicator for this move. Again, the background markets aren't really giving us the great correlation still. The euro had the huge spike up last night, and then it came back and closed unchanged. Gold had a little bit of a rally, and actually had a slightly bullish reversal day today, which I'm kind of leaning towards buying some gold here again. It's been a while. I've gotten whacked around a little bit the last couple times in the gold miners. So I'm kind of keeping a close eye on that, but I'm definitely leaning to pulling the trigger on some longs there. Maybe a little bit of a pullback overnight in gold and silver. Try a small long there. I think that's enough. I got to go home and get some rest. It was a long day in court, guys. I was there from 7 until 1 today. And no food, too much coffee. Get some rest tonight. I don't know if I'm going to throw up any trades early tonight. I want to see if we can get a bit of a bounce early. Otherwise, I'm going to bed early. I'm going to get up early and see how the hedge fund boys out of London handle the first hour of trading in the bonds and notes. Remember, those guys are long up the wazoo still. They did take some of those positions off, but I think they're still way too long. And that's what's driving this sell-off here. Have a great night. We'll see you tomorrow morning.